Good morning, welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Thursday, October 28th, 2010. It's 11:30 a.m. Eastern Daylight Time in the United States. It's 5:30 p.m. in Baden-Baden, which has pretty much cleared out by now. In Bermuda, it's 12:30, and in Mexico City, it's 10:30. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. For those of you who went to sleep early, the San Francisco Giants beat the Texas Rangers last night. Bill Gates is 55 years old today. Well, we have some breaking news. It's rare that we can give news that you feel happy about, but here's a good friend of ours. This is Steve Betts. Steve Betts has been appointed by Aon to be the Global Chief Information Officer for the entire company. Mr. Betts has previously been, and is currently actually, the Chief Information Officer at Aon Benfield, but he's been promoted to the corporate C-level. He's going to be reporting direct to Krista Davies, who is Aon's Chief Financial Officer. Before joining Aon in 2003, Betts held a variety of technology leadership positions across multiple divisions and geographies. He graduated from the University of Manchester in the United Kingdom with a Bachelor of Science in Management Science and also in mathematics. We're very happy for Betts, and Aon could not have chosen a better fellow. Congratulations to him. Now to our main news. Well, this might have some impact on the elections this coming Tuesday. The number of people who filed new claims for unemployment benefits actually fell 21,000. Down to 434,000 this week. It's the third straight decline. It's the lowest level since early July. Economists polled by MarketWatch had been expecting claims to fall down to 450,000. Instead, they went down to 434,000. The stock market seems to be unimpressed. It's down 15 points right now. Well, the reports have begun to come in on earnings from the insurers and reinsurers. Let's take Renaissance Re first. RenRe wrote a reduced level of cat business in Q3 of this year. This, of course, followed a deterioration in market conditions in its core markets. RenRe says it unveiled a $205 million net profit for the quarter, which is pretty good. In its reinsurance segment, RenRe wrote about $119 million of gross cat premiums during the quarter. This is down from $132 million for the same period last year. A further contributing factor in the decrease was the non-renewal of a large contract. We don't know who that is. The $209 million third quarter profit figure was down 15% from a profit of $258 million during the same period last year, largely because of the New Zealand earthquake. RenRe had a $73 million net negative impact from that quake. Their combined ratio went up to 72.6%. from 43.3% during Q3 of last year. Neil Curry indicated that the results, of course, reflected the lack of U.S. landfall hurricanes in 2010. The Dr. William Gray in Colorado, where are you? I hope you heard that since you predicted 9 of them. But Mr. Curry also notes that as we approach the January 1 renewal season, we'll continue to focus on expected profit rather than on premium volume, which is the RenRe way after all. Aspen Re came in with their numbers. Their profits fell by more than a third during the third quarter of 2010. They suffered a $20 million loss from the New Zealand quake. They also took a significant hit from oil and gas pipeline losses. They posted net income of about $93 million or 79 cents a share after tax for the quarter, compared to $145 million or $1.40 per share for the same period last year. ACE is sticking out. They seem to be going in the opposite direction. They're going to make a bigger operating profit for the full year of 2010 than previously thought. This is after posting strong year-to-date results. They put up their 9-month numbers. ACE has increased operating earnings guidance to between $7.20 and $7.40 a share, up from $6.25 to $6.75 a share. ACE made a net profit of $2.1 billion in the first 9 months of 2010, up 32% from last year. Their combined ratio increased to 90.2% from 88%. That's not that much. Profit for the third quarter alone increased by almost 37%, up to $675 million compared to $494 from last year. $50 million of cat losses were attributable to the New Zealand earthquake. Cat losses for the quarter went up from $45 million to $97 million year on year. ACE is also in the news. They're going to acquire part of New York Life's operations in Asia, specifically in Hong Kong and South Korea. They're going to pay $425 million in cash. ACE said that the deal would expand its business in those two markets where it had only been a player in the property and casualty group. ACE acknowledged that neither Hong Kong or South Korea were easy markets, but they've said that they've assumed conservative growth. The transaction meets our minimum mid-teens return hurdle. That's pretty good. The group's Asian life businesses include China, Vietnam, Thailand, and Indonesia, which were all built up from the ground up. So with the entry of Hong Kong and South Korea now, they're going to be well positioned. New York Life is going to provide about 2,400 captive agents in Hong Kong and South Korea as part of the deal. ACE said that the deal is scheduled to close during Q1 of next year. It's going to be financed with cash on hand. Now, Richard Banks, the editor of Insurance Day, is obviously on a Asian trip. We reported yesterday how he had recounted a conversation he had had with Lord Levine. He apparently has had a discussion with Michael Wilkins, the Insurance Australia Group, IAG CEO. Mr. Banks reported in Insurance Day today that reinsurance protection has allowed IAG to remain on track to meet full-year guidance despite facing substantial natural peril losses last month. CEO Michael Wilkins reiterated an insurance margin of up to 12.5% for the year. This is despite receiving 6,500 claims last month from the hailstorms in Melbourne and Perth, and despite receiving more than 7,000 claims from the Christchurch earthquake. Wilkins said, "From a financial perspective, the claim costs for the group from these events will be covered by reinsurance," once again demonstrating the importance of having a robust reinsurance program to manage the financial volatility of these types of events. I couldn't have put it better myself, Mr. Wilkins. Stock market is still down about 15. We'll go to a word from our sponsors and come back with the rest of the news. Well, the Lloyd's broker Besso is in the news. They've launched a managing general agency that they're going to call Gladstone Underwriting. It's going to provide online commercial underwriting. Nove Syndicates is going to provide the capacity. The new MGA is focusing exclusively on UK commercial business, offering package insurance arrangements for small and medium-sized companies. Terry Wellard has been appointed chairman of the new MGA, and Vanessa Lampard has been named underwriting director. Wellard was quoted as saying, "Lloyd's has recently reinforced the importance of distribution through the likes of MGAs in the market making. Lloyd's is terming them, Mr. Wellard termed them, the flavor of the month. When I was approached by Besso to assist in the formation of Gladstone Underwriting, the unique proposition to create a virtual insurer was irresistible. The management is sound, the all-important underwriter has a wealth of experience, and we're seeking to create a panel of good quality brokers. Isn't it strange the direction things go? It was just several years ago that commercial brokers were buying reinsurance brokers in order to capture all of the business. Now we have reinsurance brokers essentially starting providers to capture all the business in that direction. Well, these next two stories are from those people at the Insurance Insider who continue to scoop everybody. They're just little blurbs. Here we go. Allied World Insurance Company has lured senior platinum underwriters reinsurance executive Kevin Marine to join its U.S. reinsurance platform. This is according to the Insurance Insider. Marine was Chief Operating Officer and Chief Underwriting Officer at the Property and Marine Division, appropriately enough, at Platinum Underwriters U.S. Reinsurance subsidiary. He's going over to AWACS. Another quick flash from Insurance Insider, and this is a little bit of a head-scratcher. Colin Kitty is leaving Willis Re, only 1 week after being named the executive in charge of its specialty business at Willis. Colin Kitty is going to Guy Carpenter. The Insurance Insider reveals that Kitty, a retro non-marine specialist, is going to join Carpenter as it builds its own marine practice. Speaking of Willis, Willis has reported a net profit for the third quarter of $64 million compared with $78 million a year ago. The 9-month result was a net profit of $357 million. That's unchanged from last year. Total revenue for Willis was $733 million for the quarter, up a little bit from $725 million last year. Net new business growth of 6% helped drive a 4% organic growth in fees and commission, although the declining premium rates offset the impact of new business by about 2%. Of course, Willis is the one company that has reduced contingent commissions, actually eliminated them outright. They reported $1 million of contingent commissions for the quarter and $11 million for the 9 months, down from $2 million and $26 million respectively. Those contingent commissions, they note, are a legacy of their acquisition of HRH brokerage in 2008. Keep in mind that yesterday we reported Gallagher's totals that were boosted significantly by contingent commissions. Joe Plumeri hailed the results, showing organic growth and indicating that once again they remain the only broker not accepting contingent commissions. There was an explosion in Uttar Pradesh state in India several hours ago. At least 4 people were killed after a 2-story government building, which was apparently a health center, came down completely. There had initially been fears of a terrorist attack. The government is saying that that's not the case. Just before we came on the air, we received an update that in fact what it was an explosion at a fireworks factory next door. Excuse me, we mentioned yesterday how Tom Bolt at Lloyd's is insisting that his syndicates come back with realistic disaster scenarios following the BP spill in the Gulf of Mexico. Well, I guess that's trickling over to the oil companies that are operating in different parts of the world, because Chevron, which has a massive drilling operation in the North Sea out by the Shetland Islands in the northwest of England, came back with a report this morning saying that Shetland drilling could trigger a spill worse than BP's Manacondo well, which of course was the Gulf of Mexico well. Chevron is currently drilling about 160 miles north of the Shetland Islands in about 1,600 meters of water, which is significantly deeper than the BP well. Chevron believes that in a worst-case scenario, the North Sea well could release 77,000 barrels a day, 25% more than was coming out into the Gulf of Mexico waters with BP. Chevron doubled its worst possible forecast from 35,000 barrels a day up to 77,000 after reviewing all of its data in light of the BP accident. Managing director at Chevron said that the high-pressure nature of the area led to the larger estimate. He said Deepwater